Hello everybody, hope you are doing great. So we are going to do Gaar. We already completed Advanced Pricing Equalization Levy and today's topic is going to be Gaar. The General Anti-Avoidance Rule. Gaar stands for General Anti-Avoidance Rule. Now let's get into this. What is Gaar? Any declaration of arrangement as impossible avoidance agreement. Now we have to understand this. Okay, so let's question mark this term. What is impermissible avoidance agreement? Okay, any declaration of arrangement by what as an imprisonment avoidance agreement and tax computation as per provision of this chapter. Says about the Gaar. This is one of the condition mentioned in Gaar. Second says about the applicable from, it is going to be applicable from the assessment year 2018-19 onwards. 18-19 onwards. Okay? Application for any other step in or part of arrangement. Now we know this point. Okay, second point was super clear to you. What is this meaning? It is clear to us. Now we have to understand what is impossible avoidance agreement, okay, and what is step or part of arrangement. We have to understand these things. So let's go for this step, this third condition of this Gaar, okay, which means what is step. Now step means, step includes measures and an actions. Measures and an action which is particularly one of a series taken in order to deal with, okay, or achieve any particular thing or object in the arrangement. It is the measure or action which is done for particular one of the series taken in order to deal with or achieve any particular thing or object in the arrangement. Okay, so we get the meaning of step. Now we have to go for the arrangement. Now what is the arrangement? Arrangement is any step in. It is any step in. Again, step in means this part, right? Arrangement means any step in or part of whole of what? Transaction, right? Operation, scheme, agreement, understanding, whether enforceable or not. Again, I am going to repeat, what is arrangement? Arrangement is any step. Step we already discussed, that is, it is a measure or action which is done to achieve any particular thing, okay, or done for object in the arrangement, okay, or particular one of the series is taken in order to deal with this thing. Okay, so this was the first thing which says about the arrangement, that is it is any of this step, okay, or part of whole of transaction, operation, scheme, arrangement, agreement and understanding, whether it is enforceable or not. Okay, so we get to know about the third condition, which is written step and arrangement. Okay, let's read it again. A declaration of arrangement as impermissible avoidance agreement and tax computation as per provision of this chapter will cover under Gaar. Okay? Second, application from assessment year 2018-19. Third, step and arrangement. Okay? Applicable for any step and any arrangement. Now let's go for the impermissible avoidance agreement. Now there is one more point which says Gaar provision have been given overriding effect. We have seen this. Do you remember? I have already mentioned this point in DTA. If there is DTA provision and income tax provision, what are we going to take? Any provision which is more beneficial to the SEC, right? Whether it is DTA provision or any of the income tax. But what if Gaar provision is there? In that case, Gaar will going to override. We are not going for the beneficial of SEC. Gaar provision is going to be override. Okay, so this is what written in the section. The section start with a non-obstinate clause, which means if there is conflict with provision other section, then this section shall provide over conflicting provision. Is this clear? Yes. Impermissible avoidance agreement under section 96. We have to understand this because this is one of the condition written in Gaar. Okay, it means an arrangement that the main purpose of which is to obtain tax benefit. The main purpose of impermissible avoidance agreement is to take the tax benefit, okay, which creates right or obligation which are not ordinarily created between dealing at arm length. Okay, actually what happens, the SSE takes the benefit of tax by using loopholes. Okay, by using loopholes of tax provision, the SSC would like to take the advantage of tax. Is it clear? So this is first condition written in the impermissible avoidance agreement, which means create any right or obligations which are not ordinarily created between person during arm length dealing at arm length. Okay, result directly or indirectly misuse or abuse of provision of act, just because the SSC want to take what, the benefit, which benefit, tax benefit, so which directly results or indirectly result misuse, abuse of provision of act. Okay, lack of commercial substance or is leading to lack commercial substance under section 97 whole or part, which means simply lack of commercial substance. Okay, fourth says about is enter into or carried out a means or in manner which are not ordinarily employed for bona fide purpose. The main purpose of the main purpose of impermissible avoidance agreement is to take benefit of tax, right, by using loopholes of tax. Okay, so what is now tax benefit? Let's read out. The tax benefit says about the reduction or avoidance or deferred of tax or any amount payable under this act. Again, I'm going to say any reduction of tax, okay, or avoidance of tax or deferred of tax or any amount which is payable under income tax, okay. And again, this is one more point of continuation, a reduction or avoidance or deferred of tax other amount payable under this act which result of tax treaty. Is it clear? Hope this part was clear. Or second thing which is written in tax benefit says increase in refund of tax, if there is any increase in refund of tax. Third, a reduction in total income. If reduction of total income is done, in that case the SSC have to pay the less tax amount. The tax liability would be very less if the amount of total income amount is reduced or decreased or shown falsified amount. In that case, what happens, the reduction in tax liability would be happen, okay, or increase in loss, okay, will get the benefit, right? Okay, so this is tax benefit which include reduction of tax, increase of refund, okay, and reduction of total income, increase in loss, and so on, okay. Now let's go for this, where non-applicability of Gaar provisions are going to apply. There would be non-applicability of Gaar when arrangement with tax benefit in the relevant assessment year arising aggregate to all the parties to the arrangement does not exceed 3 crore. Again, when the arrangement with the tax benefit, with the arrangement with tax benefit in the relevant assessment year of aggregate of all parties to the arrangement does not exceed 3 crore in the amount. In that case, Gaar will not going to be applied. Second, for the foreign institutional investor. Foreign institutional investor who is SSC under this act, who has not taken benefit of agreement, referred section 90 or section 90A, okay, who have not taken benefit under section 90, 90A, do you remember which section was that? Okay, who have invested in listed securities or unlisted securities with prior permission of competent authority in accordance with SEBI. Is it clear? Who have taken the prior permission from SEBI. Let's rewind it again. If any of the arrangement, Okay, any of the arrangement is done with tax benefit, ठीक है, and the amount in relevant assessment year do not exceed 3 crore, ठीक है, do not exceed, then GAR provision are not going to apply. In case of foreign institutional investor, when the person is SSC in this act, okay, for that person GAR is not going to apply. Second says about where the benefit of agreement is not taken under section 1990, ठीक है, and third says about who have invested in listed securities and taken the prior permission by SEBI. Okay, in that case again the foreign institutional investor will not fall under GAR provisions. They would be non-applicability of GAR provisions. Is it clear? Okay. Third point says about a person being a resident person, let's write out, being a non-resident in relation to investment made by him by way of offshore derivative instrument or otherwise directly or indirectly in foreign institution investor. A person who is a non-resident who have invested by way of offshore through what? Derivative instrument or any other, ठीक है, directly or indirectly, but in the foreign institutional investment. Is it clear? And this person will also not fall in the GAR provisions. Fourth, any income accruing or arising or deemed to accrue or arise or receive or deemed to receive by person from transfer of investment made before, we are talking about before 1st April 2017 by such person. I repeat, any income accrue, arise or deemed to accrue or arise, ठीक है, or received by a person by transfer of investment before 1st April 2017. For these people, GAR provisions are not going to apply. Is this clear? This was a very short lecture of GAR, ठीक है. So we have completed what? Advanced pricing, we have completed equalization levy, we have completed GAR provisions, okay. So tomorrow onwards, this was the end of these chapters, okay. Tomorrow onwards, we are going to start assessment of non-resident. Hope you like the video, hope you understand the video. Hit the like button if you like the video and if it was useful for you. Till then guys, we'll meet tomorrow.